Well, over the past few months, there's been a surge of companies partnering with Tesla to gain access to the largest charging network in the United States. Mercedes-Benz marks the latest automaker to have done so. It's clear to see that electric vehicles are not just here to stay, but are thriving as consumers lean towards EVs, whether to be part of the growing trend or from climate-associated reasons. Now, Flash is focused on accelerating the growth of smart cities across the United States by offering cloud-based software to assist with parking management and access to electric vehicle charging stations.
When Lucid produced a significant number of EVs in 2022, several Tesla bears dished out bearish comments about Tesla's demand and Tesla's stock price dropping. Many even said that the competition is closing in on Tesla, and in no time, the automaker will be nowhere to be found. But every Tesla fanboy knows that not only are these claims bearish, they are also untrue. EV manufacturers like Lucid have been trying to compete with Tesla by offering luxury electric vehicles, but we know that they'll soon wear out at this rate. If you're a Tesla bull, then you know that Tesla's demand has been incredible, at least compared to that of other auto manufacturers. The only strong competition that Tesla currently has is BYD in China, and that too will soon become a thing of the past. If you're still in doubt, then listen to this.
It's time for a look at a developing story with Kevin Green, senior markets correspondent here on the network. So Kevin, we're looking at Lucid today, and Lucid has been on quite a nice tear, at least, over the last several sessions. Some volatility, not unusual for this name, but they did produce fewer cars in their second quarter, and investors are not pleased.
Yeah, we are seeing the company actually produce around 2,173 vehicles for the second quarter, and they actually delivered 1,404 vehicles. Now, that is actually down from the first quarter, which they made 2,314 vehicles compared to the deliveries also of 1,406 vehicles. And then once again, that's actually down from the fourth quarter. So we are seeing the sequential downward impact when it comes to production as well as deliveries. Now, obviously, we know about the impacts when it comes to the pricing war between Tesla and pretty much the rest of the EV space, but this is also a sign of still having issues with the supply chain, which has been an issue for them over the last year now. We are actually seeing, for the most part, some of these other EV companies like Rivian continuing to ramp up their production, and they're on track right now to have about 51,000 cars that are going to be produced, which would be above the company's guidance.
It is often assumed that the growing popularity of electric vehicles makes them more reliable than their internal combustion engine or ICE counterparts, while, in fact, it is a result of several other factors, one of which is the lesser reliance on oil. The amount of research being poured into developing electric vehicle technology is both eye-watering and staggering, while on the other hand, the development of combustion engines is drying up, with almost nothing new to look forward to. Hello everyone, and welcome back to Tesla Tomorrow. Combustion engines have long since matured, with only incremental improvements made. Meanwhile, electric vehicles are just coming into their own space and even now are directly competitive with internal combustion engines. Let's also talk about cost and pricing. The price of electricity is much lower than that of gasoline or diesel. Once the cost of batteries falls, then the cost of the whole vehicle, buying an electric car and running it, will also be cheaper. Overall, the price of electricity is likely to be comparatively cheaper relative to gasoline going forward, as solar and wind have now matured and are becoming much cheaper than coal. Interestingly, this advantage has been recognized by several companies, each striving to manufacture the best EV yet in the market. But one thing never changes, which is that no one does it like Tesla. And while you may not agree with this, we have a few reasons to share with you, so stay with us on this one. But before we start, if you like this type of content, make sure to hit that like button, subscribe to our channel, and turn on notifications to stay up to date on everything happening with Tesla. When people say they want electric cars, oftentimes it is that they want a Tesla. Think about it. Tesla has spearheaded the transition to EVs, and if there is any company that has made the idea of self-driving cars very exciting, that company is Tesla. So we can say that these other companies are only following in Tesla's footsteps. Tesla is leading the charge and no one is even coming close. It is anticipated that there will be a huge EV transition over the coming years, and it is also expected that by 2030, electric vehicles will take over the entire automotive industry, everything. The entire fleet of government-owned vehicles with internal combustion engines will be phased out and will be replaced with 100% all-electric vehicles by 2035 to 2040. And all privately owned light-duty vehicles with internal combustion engines will also be phased out and will be replaced with 100% electric vehicles by 2050. A study by Argonne National Laboratory found that maintenance and repair of an electric vehicle's transit bus is 40% less than the cost to maintain an internal combustion engine vehicle of the same size. Likewise, EVs are more energy efficient. The thing is, the average internal combustion engine has a fuel efficiency of only 40%, meaning that 60% is lost via heat and friction. And as a result, internal combustion engines consume far more energy traveling the same distance as an electric vehicle. The only issue here is that it takes a lot to make EVs, and car companies cannot just switch to manufacturing these types of cars. Also, electric vehicles are a completely new technology altogether, so car manufacturers often find it a bit tasking producing EVs at scale. But the interesting thing here is, this is not the case for Tesla, which is why buying Tesla stock may be the investment opportunity of the century. In its 2022 Q4 earnings report, Tesla said it expects to deliver 1.8 million vehicles in 2023, up 500,000 vehicles from a year earlier. However, several Tesla investors are pricing in 2 million vehicle deliveries for the year, and this is largely due to Elon Musk's comment that 2023 deliveries could hit 2 million vehicles. According to Musk, 2 million deliveries is possible if there are no external disruptions and if nothing goes wrong. This means no major wars, catastrophes, or economic collapse. Elon Musk also said that if there are no unforeseen circumstances this year, then Tesla will be able to deliver more cars, adding that the internal production capacity of Tesla's factories is closer to 2 million cars. There is a high chance that Tesla will hit record quarterly deliveries this year. I mean, in 2022, we delivered 1.31 million vehicles. And so if the automaker hits 2 million cars this year, that would be an increase in its growth rate by 53%. And that's not even all. Tesla's price cut and the continuous ramp up of production at its factories are two major catalysts that can cause delivery rate to grow this year. Estimating the current capacities of Tesla's factories in Shanghai and Fremont, we find that production is roughly around 1.6 million annualized. Therefore, to produce 2 million cars for the year, Tesla needs an additional 400,000 vehicles from its new factories in Berlin and Texas, which is not so much of an impossible task since production rate is actively being ramped up at these facilities. So think about it. Can these other companies even come close? Tesla is performing better than the bears expect. No doubt, like any other innovative business, Tesla has had its fair share of criticism, and over the years the bears have had a lot to say about the car company. However, over time, Tesla has proven that investors can stay hopeful in the company's future. In a few years, the demand for Tesla cars will be through the roof. FSD would eventually be achieved, robotaxi will no longer be a thing of the future, and other Tesla vehicles like the Cyber and semi-trucks will be driven in many countries globally. So what's there not to be bullish about? We'd like to know your thoughts on this. Do you see a place for Tesla competitors in this growing EV market? Let us know in the comments section. If you would like to know what Tesla has been up to these past few days, go ahead and click on the next video on your screen. See you there.